your esteemed company conducted via video conferencing and other audio-visual means. It is both an honor and a privilege for me to preside over this momentous occasion of the 51st Annual General Meeting of our organization. I extend a warm welcome to each of you as we commemorate this significant milestone. I must express our profound gratitude to all our shareholders and stakeholders for their unwavering support and invaluable guidance, which have been instrumental in propelling us towards even greater heights. The audited annual account of FY 23-24 together with auditor's report and director's report thereon are already with you for quite some time, and with your permission, I take it as read. The total revenue of your company for the financial year 23-24 has been 192 crores 86 lakhs. Consolidated revenue was 19401 lakhs as compared to 14757 lakhs. Consolidated revenue was 14,512 lakhs in the previous year, registering an increase of about 30.69%. The EBITDA from normal operations for 2023-24 was rupees 4829 lakhs. Previous year, the EBITDA was 2441. The profit after tax PAT of rupees 741 lakhs. Previous year was 459 lakhs for normal operation. The board of directors of your company has recommended payment of dividend at the rate of 15% on equity share, that is 15 paisa per share of rupee 1 face value for the year 23-24 for approval of shareholders in the annual general meeting. During the year, your directors issued and allotted 449.19 lakh equity shares of face value 1 each as a bonus share in the ratio of 2 bonus shares for every 9 existing equity shares held on record date to the eligible members. During the year, the existing authorized share capital of the company was increased from 30 crores to 60 crores. The letter of offer for rights issue of about 823.58 lakhs fully paid equity shares of face value of rupees 1 each in the ratio of 1 right share for every 3 existing shares held as on record date at an issue price of rupees 6.06 per share, including the premium of rupees 5.06 per share, aggregating to about 49 crores 90 lakhs. It's open for subscription from the 20th September 2024 and will close on the 1st October 2024. The promoter group are subscribing the entitlement fully and have also applied for the balance rights issue share. You will be pleased to know that your company is in the list of the top 2,000 companies of BSE in the rank 1063 as on 31st March 2024. A better product mix, operational efficiency, and stringent control on the cost will contribute towards increasing productivity, production, and operating margins. Continuous efforts are being made to further improve energy and raw material consumption efficiency, along with emphasis on vertical integration, which will lead to path of your company to emerge as a strong player in the chemical market. Your company has successfully established a significant competitive advantage over Chinese manufacturers through superior processes, stringent quality standards, and robust pollution control measures, creating a formidable entry barrier. By consistently investing in R&D and refining its quality-driven processes, your company has evolved into a globally cost-competitive manufacturer with strong long-term fundamentals. These strategic measures have not only reinforced our market position, but have also enabled us to effectively combat the challenges posed by Chinese predator pricing. On focus on sustainable production practices and high-quality output has insulated us from the volatile pricing pressures from overseas competitors. Looking ahead, we are poised to leverage a unique product portfolio and competitive strengths to expand into diverse and resilient sales lines, ensuring sustainable cash flows well into the future. This strategy underscores our commitment to long-term growth and value creation for all stakeholders. I would now like to share my thoughts on the business and market outlook as we move into the current year. Your company continues to maintain a positive growth trajectory with its core products meta-aminophenol and aniline 2,5 showing steady and healthy growth. These products remain vital to our portfolio and continue to perform well across key markets. Our recent capacity expansion of ODB2 has seen rapid uptake, faster than anticipated utilization. However, the presence of the Chinese predatory pricing in the ODB2 market has tempered revenue growth despite increased volumes. We continue to monitor the situation closely and are focused on optimizing our operations to remain competitive in this challenging market environment. In para-aminophenol (PAPs) segment, we have successfully migrated our plant to continuous manufacturing, now operating a capacity of 6,000 tons. This shift has greatly improved our operational efficiency from synthesis through downstream processing, ensuring we are well positioned for long-term growth despite similar pricing pressures from Chinese competitors. In line with our commitment to sustainability, the company is moving rapidly towards achieving zero discharge status by September 2025. This ambitious goal underscores our focus on adopting environmentally responsible practices across all operations. Our efforts towards backward integration and updating technologies across all plants are advancing swiftly, enhancing both productivity and sustainability. We are heavily investing in green energy initiatives as part of our long-term strategy for sustainable business practices. Our current focus is on producing renewable energy for captive consumption and will be for manufacturing green hydrogen at our own facility. To support these initiatives, a rights issue is currently underway to raise capital for accelerating our renewable energy projects. These investments not only align with our sustainability objectives, but also strengthen our position in fostering a cleaner, greener future for the business. In quarter one of the financial year 24-25, our company has a revenue of 31 crores 11 lakhs and a profit of tax of over rupees 4 lakhs. Continuous efforts are being made for efficient energy and raw material consumption. The rate of flow of orders is encouraging. Production facilities are realigned and will be expanded to meet the demand. The company continued to focus on cost control at every level to improve the operational efficiency, which along with the increased operating level, barring unforeseen circumstances, expect to further improve the turnover and performance. The company maintains a high standard of environment practices in our plants and are continuously focusing on moving towards newer and greener technologies. Your company is expected, barring unforeseen circumstances, to deliver satisfactory performance in the current financial year. The management will ensure that your company will leave no stone unturned to improve the overall performance of the company. Before I close, I would like to express on behalf of the board an appreciation to all our personnel for their dedication and continued efforts that have contributed to the performance of the company. On behalf of the board, I would also like to extend my gratitude to our bankers, auditors, vendors, customers, and all other business partners and stakeholders who have been with us in our forward journey. To my colleagues on the board, I am grateful for their valuable advice and support. Last but not the least, I thank you all members for the trust and confidence reposed in our endeavors to put the company on path of progress and for sparing a valuable time in participating in the meeting. Jai Hind. I will now place all the agenda items as per notice.
The first question is, what is the future plan of the company? As we mentioned in the past, currently our focus is on utilizing additional capacity of ODB2 as we've expanded our capacity last year from 550 tons to 2200 tons. Additionally, our plans that have recently come into that we've currently fructified is to move the PAP plant from batch process to entirely continuous from beginning to end. And with that, the active capacity is 6,000 tons. Our aim is to maximize that utilization while finalizing the plans to get from 6,000 tons to 36,000 tons of capacity. Our MAP and Aniline 25, two of our core products, remain steady growth with new applications continuously growing. And so in those products, our aim is to work towards backward integration and to lower cost further, as has always been the company's position on risk mitigation. The next question was, what is the global situation? As we mentioned in the past, and as the chairman also mentioned in his speech, there's a lot of pressure from China with regards to prices. The Chinese have predatory pricing policies, often selling less than raw material and utility costs. In a lot of cases, we've noticed that there are several Chinese competitors that have also shut down because of some certain larger competitors offering products at very low prices. We have mitigated that to a large extent because of our policies of backward integration, and we continue to look at doing that in the future. Our better quality with our cost competitiveness on backward integration keeps us strong in the market, and whenever we see the market will turn, we expect that there shall be improvements in the bottom line going forward. The next question is, were there any impacts on the company due to the recent budget? No, the budget has not affected the company at all, and it continues to run in the same fashion as it did earlier. The next question was regarding the receivables of 9 crores for over a year. This is something we mentioned before, that the receivables on the books are primarily due to us stocking product in our subsidiary overseas for our overseas customers. They appear as receivables, but they're actually stock. Similarly, the receivables are for more than 6 months because on average between shipping goods, stocking goods and delivering goods, often 6 months of receivables are there in our foreign subsidiaries. Question is why our CWIP has increased. As mentioned, there are several plants that are under implementation, particularly the expansion of PAP up to 36,000 tons. Part of the plant is live at 6,000, but part of the plant from utilities, storage tanks and other infrastructure has been rolled out for 36,000 tons, and a lot of it cannot be capitalized till such time as the plants are fully functional. Your next question was, what do we need to increase the revenue or profit? We've recently expanded capacities in both ODB2 and in PAP, and so we expect both profitability and revenue to increase because of both those expansions. It certainly would help if the predatory pricing practices of the Chinese were reduced, or if there were further incentives from the government in supporting us as the Chinese government gives to its companies. The outlook for 2025, we are expecting growth as we've done in the last few years. The top line improvement is expected to grow 10 to 15, maybe 20% over last year. The bottom line EBITDA, we are looking to maintain at 25%. There was a question about the value degrowth in our products in 24. Yes, there was a value degrowth, whereas there was a volume increase. And the value degrowth was primarily because of the Chinese dropping the sales price of the product. However, our increased volumes helped to offset the decrease in value through the increased volumes. And overall, we had an increase in absolute revenue, but the margins were reduced because of the lower pricing. The next question on sustainable margin expected. We've seen that the Chinese have dropped the prices a lot. The last 3 to 4 months, the prices have held steady because they've reached a point where they can't fall any further. We expect sustainable margins would be better than what we have right now, but they cannot get any lower than we are currently at, just because the Chinese are also making losses at this point, as opposed to us who are doing what we're doing based on our backward integration, which is not something that our Chinese competitors have. So while the margins are not expected to go lower, even if we take these as sustainable margins, we are okay, as long as our volumes keep increasing, which is what we're working towards. But we do hope that the margins will get better over the next few quarters. How is the price shaping up for MAP, PAP, and ODB2? We are getting better pricing for ODB2. We're not at the liberty of disclosing the prices that we're getting from our end customers. However, we are getting better prices for ODB2 than the Chinese because of the China Plus One policy. On MAP, we're getting better pricing from our customers because our quality is better than that of the Chinese, especially for certain specialty or high-end products that we offer the product to. Our PAP pricing is the same as anyone in the world because PAP is fully commoditized. However, because of our manufacturing processes, our PAP has a better margin than any of our competitors. The market sizes for these, MAP is about 10,000 tons annually, ODB2 is about 10,000 tons annually, that's globally, and PAP is somewhere around 200 to 230,000 tons. Our major competitors are entirely from China, and in all three products, there are about 3 to 4 different Chinese companies that manufacture these products. We expect the PLI that we've been awarded is 8.5 crores a year from the PAP PLI scheme. The next question was regarding incremental capacities. So we've recently, so in 2025, and so while we're not looking to extend our ODB2 capacities, our PAP capacities have already in this year reached 6,000 ton active capacity, and we are working towards multiple phases to get us to 36,000 tons over the course of the next 18 months. So yeah, to the roadmap to 36,000 tons was the next question. As I mentioned, in 18 months we expect to get there. The question of that was, how have the revenues increased from 143 crores to 190 crores? I covered this a little earlier, that despite the prices going down, the market size has expanded and the volumes have increased, and so we've increased our total revenue through increase of volumes and the market overall. So our PAP production cost and margins are better than our competitors. I would reckon about 15%, maybe 18%. Primarily because of the technology that we use to manufacture the PAP. The absolute margins are a little difficult to discuss just because the prices are fluctuating, and based on whatever the prices coming in from China are, the 15 to 18% better margins are based on our process. Are we looking to get into paracetamol? Yes, we've mentioned that in the past. Our focus right now is on or has been on getting PAP entirely continuous from the synthesis to the downstream. Now that we have accomplished that, we will simultaneously look at expanding the PAP capacity as well as looking at the paracetamol market. The employee benefit expenses have grown because we've added several people to the management team that so that as we grow, we have a management team that's able to take care of the expansions that we're looking at. The order position is something that's confidential and we cannot share those details. The CapEx plan, as I mentioned, was to focus on the PAP expansion, on backward integration, on green hydrogen, on renewable energy, and to work towards going effluent free by September 2025. The new products that we're working towards are, as I mentioned, paracetamol is something we'll be working towards. Where green hydrogen is one. I'll address the green hydrogen question that came later in more detail. Yeah, that's the focus on the new products for now. Why have export orders come down? As the Chinese have offered lower pricing to Europe and American markets, we focused on making sure that we get the best prices for the products, whether they're export or local. And as it turned out, we saw a dip in exports only because there were more favorable pricing in the local markets. Breakup of revenue towards end applications is confidential, and that's not something we'd be able to share, especially because certain applications are very focused on singular customers, and by sharing those percentages, that would divulge how much we are shipping to each of those customers. When will the CWIP change to be capitalized? That is, some of it is being done in the imminent future. as the 6,000 tons has been put into action. But the rest of it will be done over time as we gradually expand over the next 18 months from 6,000 ton utilization to 36,000 tons. Next two questions come together. Why have inventory and receivables gone up? I've covered this previously. The inventory and receivables have gone up because some of our stock held in our subsidiary overseas is treated as a receivable, but it's actually inventory stored overseas. Percentage of backward integration. Most of our products are backward integrated, and if I had to take an approximate percentage of backward integration, I'd say from basic raw materials to our end products, we're probably 80% backward integrated, and our aim is to go completely backward integrated over the next year. The growth in the next 5 years, we're looking at healthy growth. We're looking at a minimum of like 15 to 20% year on year, aggregated or compounded over the next 5 years. Possibly more than that, depending on how especially our volumes are increasing, and so that helps sustain that growth in the initial few years. And when we see the market pricing bounce back from China, which we do expect to happen within the next 12 months, we will expect faster growth at that point. The last question on green hydrogen. We're not expanding into green hydrogen to get into a new line of chemistry. Green hydrogen has been invested in primarily for captive consumption, as it is one of the two major raw materials that is used to manufacture PAP. And as the consumption of hydrogen in the country is growing and will grow shorter due to additional usage of hydrogen across the country, we would like to have our own backward integrated green hydrogen for the production of our PAP to remain sustainable in the future. I think that covers all of the questions that have been asked. Thank you.
Thank you, Abhishek Trivedi. Hope you were able to answer